Welcome back to my final morning report chart appraisal of Thursday, the 28th of September with me, Richard Perry, market analyst at Hantec Markets. Looking at gold, we've seen the gold price again sharply closing lower. 1287 was that old support. That's been breached yesterday by a second of two strong bear candles. Again closing towards the low of the day, and it looks like it's sort of positioning again for further downside today. It's now back into this sort of support band. I'll move this one around between sort of 1278 towards 1267. You've sort of seen this support band here in place from the August lows and highs. So pivot area really of around about $11 between this area, and it's now being tested. So a breach of the lower part of that band, 1267, would open 1255, which is the next. Sorry, 1251, which is the next sort of lower, higher low as on the downside within that recovery trend. So it looks like the market is gaining traction on this correction as well. You've got the MACD lines falling sharply, stochastic sharply lower as well in bear territory, the RSI 40. In the bear phases, it tends to get towards 30, so there is still downside potential in this move, I think, and looks like any rallies are getting sold into. You can see here you've got the overhead supply around about sort of 1287, 1290 area coming in there underneath the old sort of long-term level of 1300. So yeah, use any sort of unwinding rallies as a chance to sell. So you'd argue sort of around 50 area on the hourly RSI, 50 to 60 I think would be probably ideal. But as I said, 1287 is that initial resistance of the old support. So I wish you good luck in your trading, and I'll speak to you again tomorrow. Thank you.